The asset class has really grown since around 2008 after the global financial crisis, and a lot of the drivers there were, a kind of retrenchment of lending in the mid-market space and the need to kind of replace that, and investors looking for yield as well as somewhere to invest their excess cash. In the African context, there is a lot less in terms of actual credit formation. It's still a very nascent asset class. The role it plays is quite similar to private credit across the globe. So it's really alternative lending outside of the banking market, particularly lending that allows the lenders to focus on cash flow and meet the particular needs of borrowers. So the asset class is growing. It's growing quite quickly. We've seen significant growth over the last 18 months, particularly post-COVID. They see, I think for investors that have a risk-adjusted return view of the world, the features of private credit, so downside protection, visibility and cash flows, will suit them quite well. So you're certainly seeing a lot of kind of institutional capital seeing private credit as something that they can allocate to, especially as they're looking to diversify. For impact investors, particularly ourselves, BII, we really want to play more of a catalytic kind of market building role. We want to show that the asset class is a viable asset class. We want to mobilize capital, and by kind of demonstrating that effect, mobilizing capital, we hope to be able to support more growth capital in that mid-market space. So there's a couple of challenges. I think one of them is certainly in this current environment where interest rates have spiked globally, investors have, more options, particularly in the developed world. And so private credit as an asset class in Africa is competing against what might be viewed as safer havens. That being said, I think we are seeing interest from quite interesting African institutional investors, particularly out of markets like South Africa that understand private capital markets quite well. And we're seeing quite a bit of interest from them. So I think that's largely offsetting. And there have been a few drivers. One is, of course, again, looking for more growth, again, regulatory support to kind of allow them to invest more broadly. And so we are seeing, notwithstanding what's happened kind of globally, I think we are seeing flows of capital coming through. The other challenge is what continues to be an underdeveloped ecosystem. So there is a need for actual debt professionals across the markets, and I think there's going to be it's going to take a while to start to really see a deeper pool of investment professionals that can kind of support that. I think what we've seen is when we look at the market, there's kind of two sides to it. It's perhaps platforms that see this as an opportunity to expand into, or the limited teams that are then trying to bring in institutional investors alongside themselves to execute on the proposals. So I think, as I mentioned, institutional investors and platforms looking to do more in this asset class is going to be a trend that we're going to see. So, institutional teams that have done a lot in alternative asset classes already and recognize that there's an opportunity in the particular private credit space and looking to then partner with experienced teams. I think we're going to see that as a bit of a trend. What we hope to see and what we are seeing is a bit more of an evolution towards proposals that are closer to senior credit on the capital spectrum. So I think it has been dominated by mezzanine investors, and that makes sense given the kind of market need. But I think what we are then seeing is proposals that perhaps are not quite at that mezzanine space, not really kind of pure senior, but somewhere in the middle. So, focusing on cash flow, deleveraging, still looking for kind of security, less reliance on event-driven exits. And I think that's an important evolution for the asset class, particularly if you think about our impact thesis of looking to address a market need that the banks are struggling to meet. Being able to have more senior type strategies is going to be an important trend. And I think 2024 will see greater awareness about the asset class. Last year, there was perhaps one panel at SuperReturn. This year, there's been 2 private credit panels. So there is greater awareness about this opportunity, greater awareness around the role that it plays within the kind of broader private capital market spectrum. And so we're quite excited about what 2024 will hold for the asset class.